Welcome to Civinity Investor Relations Conference. I'm Emilia from Nasdaq Vilnius, and today you're joined for the Civinity 2024 Performance Overview. We'll start with the presentation from the management and then move on to the Q&A section. Please be informed that this webinar is being recorded and will be available on the Nasdaq Baltic YouTube channel. I encourage everyone to submit questions in the Q&A section at the bottom of the screen. With that said, I'm pleased to introduce today's presenters, Virgeda Jackaitė, the CEO of the company, and Tomas Staškūnas, the CFO. Please, the floor is yours.
Hello, everyone. My name is Virgeda Jackaitė. I am the Chief Executive Officer of Civinity Group. I'm taking this position for the past 3 years. Previously, I was heading Civinity Engineering UK, where we had our biggest project of over 14 million revenues. Previously, I lived and worked for 15 years in United Kingdom with mainly job experience in financial industries.
Hello, everyone. I am Tomas Staškūnas, CFO of Civinity Group. I have joined the company about 1 year ago. Before Civinity, I had more than 20 years experience in being a CFO of the companies in different fields, and part of the companies were also public.
Civinity is a family-owned business, and we view ourselves as a one-stop shop looking after the buildings. With Civinity Engineering, we enter the building with design and installation of HVAC systems, and afterwards we look after residential and commercial buildings and facility management. Overall, we see there is a significant growth and potential in domestic and in the rest of the Europe. About 1.5 billion Baltic facility management and engineering solutions industry, and over 120 billion in Central Europe, UK, and Northern Europe facility management. In Lithuania, Civinity takes about 12% market share, and in Latvia about 5%. Looking at our diversified portfolio, our 2024 revenue was divided into 49% in residential, 39% in engineering, 30% commercial, and 3% in our newly added segment payment solutions. Civinity is operating in 3 countries, Lithuania, Latvia, and the UK, and revenue of last year was divided by 73% in Lithuania, 26% in Latvia, and 1% in UK. Our proven business model with significant share of recurring cash flow. We have recurring revenues in residential and commercial business units of 80%, and we have just 104% in cash conversion rate of last year. Civinity grows through the acquisitions, and we are marking for the past 10 years 10 times increase in our revenue growth. So in 2014, we had 8 million revenue, and in 2024, we finished a year with 88.5 million euros. Looking at the glance of Civinity, we are over 1,600 employees. We are looking after 5 million residential square meters in residential buildings, we had 1,600 commercial clients, and we completed with engineering over 300 projects. At the moment, we are celebrating 20 years in the industry, where in 2005, David has privatized his first company in Klaipėda. So we divide our Civinity Group into 4 segments. The first one is the residential, as I mentioned previously, and we are operating there in 2 markets, Lithuania and Latvia, with such as companies Civinity Namai, Civinity Majas, and Servico. Servico is looking after new buildings. In commercial sector, we have companies such as Civinity Solution and in Service, and we are operating as well in both countries, Lithuania and Latvia. With Civinity Engineering, we are operating in Lithuania, Latvia, and United Kingdom, where Engineering Solutions also has additional companies such as Valandinis, where it's a platform for real estate staff for the long-term projects, as well as the Ionica service, where we mainly focus on BMS solutions. And fourth but not least addition is Civinity Digital, where we entered last year with the payment solutions, and we operate there in Latvia. Here I would like to go a little bit more deeper into those four segments previously mentioned. So residential business unit, we are a stable non-cycle business segment, and we've seen a significant increase in revenues since 2022 when we acquired In Service Group, and Servico was joined to the group, particularly in residential segment. As previously mentioned, this is mainly focused on the new buildings, where we increased in the number of houses, but the margins overall are a little bit lower due to less maintenance work required in the newly builds. So last year, our main focus was and main highlights was the increase in tariff revenue in Vilnius. The residential revenue is divided into two types. We have tariff revenue and additional work. So tariff revenue is regulated by municipalities and additional works is done by us. And we had a high focus on the efficiency on operations, where 2025 our focus still remains the same for the efficiency on operations, and our goal is to increase number of houses we are looking at. We've seen in revenue in residential sector increase of 11% year over year, and in EBITDA we've seen 18% increase. As mentioned before, we had a little drop in the margins due to the Servico newly built segment. Second one is commercial business unit, where it's more of the complement of residential segment for Civinity to have a full life cycle of facility management. And same as in residential, we had a major increase in revenues since 2022 when we acquired In Service Group. In 2024, we have a main highlight is when we changed management team in both countries, Latvia and Lithuania, with their more focus of efficiency, technological support, and optimization of the teams. This year, the focus still remains of improvement of our processes and growth, as well as since last year, we had a very strong push in the cleaning sector. So over here, we have revenue growth of 3% year over year, and EBITDA a little bit more than tripled over the years. Another segment is engineering business, where we operate in three markets, Lithuania, Latvia, and the UK. We started this segment when we acquired a company, Desire, in 2018. At that time, the revenues of Desire was 6 million, and since then we increased the revenues to last year 26.5. In 2023, we had 32.9 million in revenues. There was a slowdown in the whole industry of real estate in the Baltics, and that's the reasoning why we are also going down in the revenues. However, talking about 2025, we are confident of our portfolio and that we are fulfilling for the 2025, and we see that the markets are recovering. Also, in 2021, we joined UK market, where we had one of our biggest projects with the strategic client that we worked previously in Lithuania. At the moment for the UK, we are in negotiations for another big project that we are waiting to sign at the end of the year. And moving on, last but not least, is Civinity Digital, our payment solutions, where we want to create a super app for all customers' needs. At the moment, Civinity operates in the buildings, and our main goal is to add additional value to the clients and not to be just in the buildings, but be the assistant of the client in the whole city. So this to show our strategic move, the good addition to the company of the last year is a company called Mobily. It's operating in Latvia and has electronic money license, and it operates in transportation, parking, software development, and last year when we acquired it, it shows a significant move the whole Civinity strategy. This year, our focus still remains to the growth of current services and sales. We are looking to add a couple of new services, and we are also planning to add additional markets, not just Latvia. And now I would like to give the floor to Thomas, who will be commenting on the financial results.
So I would like to start on our revenue. On our revenue, we had a very stable revenue despite decrease in engineering business segment, and this was helped by very strong results in our residential. Also, our commercial business unit improved, and of course, we added payment solution as a new business segment. And talking about markets, we had healthy growth in Lithuania and Latvia, and the decrease in UK is mainly driven by lack of new projects in engineering business. Also, I would like to mention that our gross profit margin has improved quite significantly from 18% to 20%. This was mainly driven by good results in residential and commercial business units. And of course, we added new business unit of payments, which is working with higher margins. And only the dragging business unit was engineering. Talking about our EBITDA performance, we have very stable EBITDA level. Audited EBITDA is at about 8%, both in 2024 and in 2023. We had very good EBITDA margin improvement in residential commercial business units, and also payment business unit has added new margin. And the only downside was engineering and our holding operations, which also include some acquisition-related activity expenses. And also, we are calculating adjusted EBITDA, which is close to 10% in 2024 and same in 2023. We had several adjustments made to recalculate what the year would look like if we would have Mobily for the full year, and we had no expenses related to acquisition, and also some bad debt provisions, which are we believe to be lowered or at least not increased so fast in the future with much better debt collection process. Also talking about our net profitability, the main business, our long-established business lines had added about 300,000 euros to our bottom line, while operating expenses has also increased, but significant part of that increase was related to the acquisition activity. And the Mobily has already complemented about 600,000 euros to our bottom line. even being purchased and consolidated only from the middle of the year. And our interest rate expenses has increased also mainly due to the increased financing needs for mobile acquisition. Talking about our balance sheet, we have a very stable and healthy balance sheet with significant portion of our current assets in the cash. Our equity ratio has improved to 21%, despite the new acquisition of Mobile, which with each acquisition we have a negative effect on our equity ratio, but the new additions are adding profitability after the acquisition. And we had slightly worse liquidity ratio, but it mainly is because two bond issues are maturing this year. We have one public bond and one private bond issue, and they both are maturing this year. So we have already in talks with private bond company, with private bond lender to extend the duration of the bonds. And also we are preparing for new bonds to be issued publicly to refinance the current. And talking about our leverage level, we do see it as a moderate, even after last year acquisition, which was mainly financed by private bond. Our leverage level remains quite low, and we have very generous room for the covenants, and we have ability to move forward with our acquisition agenda in the future. The cash flow was also very strong, with our cash generated from the operating activities exceeding our EBITDA level. And main driver was good control of working capital items. And now I would like to hand over to Birgitta.
Here I would like to touch upon our strategic priorities for the 2025. We are focusing on efficient organic growth and new additionals through acquisitions. So here are the 5 pillars that we are mainly focusing. Firstly is operational excellence and service quality. We keep investing into IT systems to improve operational processes. Next one is strategic finance and investment. We have multiple M&A targets in the pipeline that are relating to our core businesses, facility management and engineering, as well as to our additional new segment of smart green city and becoming an assistant of the city. At the moment, we are preparing for the new bond issue that will be up to 50 million euros. We are focusing on sustainability and ESG. First year we published our ESG report, even though this is not obligatory for us this year, but we want to highlight transparency and for our investors and partners to know where we stand for. And next one is the team culture. We are working constantly for team development and engagement. One of those focus is Civinity Academy, where we have internal and external training for our administration and technical employees to increase their performance as well as their motivation to work in the group. And the last but not the least, digital transformation AI and AI initiatives. We are working on multiple AI tools to improve efficiency and quality of our services. So thank you very much to everyone who joined and listened to our presentation.
Thank you for the presentation. We will now proceed with the questions. Before that, I would like to remind everyone you can submit your questions in the Q&A box at the bottom of the screen. The first question we received is, do you intend to expand further geographically, and what are your expansion plans in terms of business segments?
Sorry.
Sorry. Maybe I will answer. We are not limiting ourselves to the current geographies of the activities. We are looking for opportunities which would complement our current four business segments, both locally and also in broader region, including Central Europe and some Scandinavia countries, but we are not ready to announce anything at this little bit too early.
When do you expect to issue the new bond?
We are currently working on that. We have our public bond maturing in autumn in October this year. So we believe that we should be ready before the maturity date. But at the moment, it's still ongoing process of preparations.
A follow-up question, how advanced are you in terms of preparation for the bond issue?
So we are currently quite advanced. We are preparing the prospectus and hope to finalize the documentation quite soon. Probably still this month.
Thank you. And all the other questions we received are also about the M&A targets. So could you maybe expand more about that if you want?
So we are looking at multiple M&A targets at the moment. We have some discussions which are in different stage with different companies, and I would just say that these targets would very well complement our current business model, our current activities. We are looking at digital solutions which would complement either mobile business segment or our facility management business segments. And as I said, we are not limiting ourselves to the Baltic region. But any other more detailed explanations would follow as soon as we will be ready to announce.
Thank you. And the final question we received is, can you elaborate more on your sustainability targets for 2025 and initiatives?
So we do see this as a very important part of our business philosophy. We are not obliged to report, but we have prepared the first report of our ESG for year 2024, and we are going to extend our reporting and we are going to improve our to put us ourselves targets and to reach those targets. We do see that sustainability is a very important part of business overall, and in Civinity we see this as a important philosophical part of your business.
And we want to be transparent. That's why this year we've taken an extra mile to publish the report now.
Thank you. It looks like we've covered most of the questions. So if you have not sent in your question yet, please do so now. One more question we received is what financial intermediary will be issuing your public bonds?
So we are currently working with Luminor Bank on that, and we do expect them to help us to make this successful.
Thank you. It seems all questions have been answered. So on behalf of Civinity and Nasdaq Vilnius, thank you all for joining. A reminder that the recording of this webinar will be available on the Nasdaq Baltic YouTube channel. And as always, if you have any questions, please reach out. Thank you for a very informative conference and have a great day.